Okay, let's kick things off. The space is still filling up, but we should not waste time. And actually, it's funny. It's the second conference I'm doing today. I was at an in real life conference this morning where I was speaking and moderating a panel, and now jumping into something that's more digital, which is also actually the reason that we came up with this concept, because I had to travel basically and use my whole morning and lunchtime to be at another conference, whereas now we can bring so many people together online wherever you are in this world. So I just checked out the chat, and seeing so many people from all around the world being able to join this session is actually really, really cool. Yeah. So first of all, warmly welcome. We have 12 amazing speakers in here today, talking about all things banking, tokenization, wallets, custody, and obviously the different investment opportunities. We will have a panel. I have my co-host Feliks with me, and Annie. She will introduce herself in a bit. And before I start in my own presentation, I would hand over the word to Annie.
Thank you, Vicky. So I'm really excited to co-host this event today. Around 30 minutes later, we will have a group photo where we can use a virtual background. So while we have some time left, you can choose your own blockchain background or use our image that we will send in the chat right now. So today we will start the conference with a brief Web3 overview. And now I would like to give a word to Vicky, and I will introduce her really quick, Vicktoria Klich. She has extensive experience in marketing, community, and product management. In 2021, Vicky fully embraced the Web3 space and co-founded w3.fund. And now Vicky invests in Web3 startups and digital assets. She also manages W3 Hub, a Web3 community and co-working space in Berlin, and shares her experience on social media, a weekly Web3 industry newsletter, and podcast. She became LinkedIn top voice and is seen on many stages talking about use cases with blockchain technology. And today, Vicktoria will start our conference with the Web3 overview.
Thank you very much. Also for the very kind introduction. I will share my screen now. So warmly welcome to the State of Web3, where I will rewind the past months in the Web3 space to just kick things off for today. And when I was thinking about what has happened in the past year, for some reason, the very first thing that comes into my mind is that these two guys are in jail now. But then the next thing is that compared to last summer, in 2023, where we had a Bitcoin price just right below 30K, we're now basically celebrating all the inflows from the Bitcoin spot ETF, and even had the second highest daily inflow ever just a couple of weeks ago. And interestingly is that looking at the past 11 years, we see that Bitcoin was the most outperforming asset class for 8 times compared to anything else. And what's very exciting also for us is that Bitcoin is not the only thing that's trending, but many people are also staking their assets, with ETH being the most popular proof of stake chain. But we will also have Tom König here today, who's the co-founder of W3 Labs, who will introduce you into the status quo of staking and what's possible later in this conference. So I will not go deeper into that. And everything is happening while actually the SEC is still hating. So the SEC in the US is basically suing everyone. So starting with Kraken, even the NFT project von Müller, Kühne and Ashton Kutcher, also suing Uniswap, Coinbase, Binance even. They had a fight with Consensus, and all that happening while the Web3 community is creating memes and jokes around that. But the SEC actually told Consensus last week that they would permanently halt the investigations. And now everyone is celebrating because it seems to be that Ethereum is now seen as a commodity, which opens up the door for all the Ethereum ETF proposals and who knows what coins to come. In the past year, we celebrated one hero, which is Solana. So last year, just below $20 and suffering from the FTX drama. And now, well, it depends on what day you're looking at, but we are right below 200. And this is probably due to all the partnerships that Solana is doing with institutions, just the recent one with PayPal. For those of you who haven't heard it or haven't seen it somewhere, that PayPal is expanding its stablecoin PUSD to the Solana network. They launched last year in August and were initially only available on Ethereum, and now expanding to Solana. They basically leveraged the high transaction speed and low costs from the Solana blockchain. And we feel like there's probably way more to come. And we also have major turns in the perception of Bitcoin, whereas BlackRock's CEO, Larry Fink, called Bitcoin an index of money laundering just a couple of years ago. He became basically the most popular ambassador of Bitcoin. And that doesn't stop here because the use case of real-world tokenization is also something that BlackRock is following. They're tokenizing now their fund, which is called BIDL, and they already raised almost 300 billion capital from investors just in a couple of weeks. And speaking of tokenization, if BlackRock's fund is too far away from you, you can still start to invest. For example, in athletes, one of our portfolio companies, Fantium, is making it possible for anyone to participate in the success of young and upcoming tennis players. And if you're struggling with bureaucracy to raise capital or want to make it easier for your employees to participate in the success of a company, we will have Christoph here today, the CEO of Tokenize.it, who will share some insights into tokenizing companies right after my speech. And also the institutions in Germany are going all in. So Germany's largest state-owned investment bank, the KfW, is about to issue their first blockchain-based digital bond this summer together with also our portfolio company Cashlink. Michael will also be here talking today. And I think this is a major issue for many people, is that investing in crypto, like securely and compliant, especially with all the regulations, is still kind of problematic in Germany. But recently, the crypto exchange Kraken partnered up with DLT Finance to make it easier for German citizens to also use their crypto products. We will have Kühne from DLT Finance also speaking here today, which I'm really, really looking forward. And when you ask me what I'm personally very bullish on, because I think it's really, really interesting, is on-chain banks. Peter Grosskopf will also be here today talking about his idea to build not only the Iron Chain, but also the Iron Bank. And what everyone is looking into right now is probably, the talk of town is probably Base. Coinbase's layer 2 is gaining so much traction with records of daily transactions, and it's cheap, it's easy to use. And this is exactly how an on-chain experience should be. Combined with their idea of a smart wallet, there are barely any hurdles to kick off your on-chain experience. To sum it up, many institutions are starting to heavily invest in the space. I mentioned BlackRock, I mentioned PayPal. Visa is putting their loyalty program on chain. We have Nike, who have been in the space for years now. Hugo Boss launching their Web3 initiative just 2 weeks ago. And also Lufthansa with their Miles and More program. And we also put all our resources into Web3. We have 2 investment funds. We have Feliks and Julius, who will introduce you into them. We have a co-working space that I will show you in a couple of minutes. We have a community-owned media house. I know the time is over. And we have W3 Labs, our infrastructure. For example, staking and tooling company. And that was it with my presentation. I hope I explained everything quite well, but I'm really looking forward to see everyone else throughout the next 2 hours. Thank you very much. So we can start with the first speaker, right? Then I mentioned it already. We will have Christoph here today, and something about Christoph. He's a physics graduate. I interviewed him for a podcast, and it was one of my favorite episodes. He was among the first developers of the Ethereum blockchain in 2014, 2015. He initiated the DAO in 2016, the world's first decentralized autonomous organization, raising 150 million, making it the largest crowdfunding company in a campaign in history. And he also achieved global recognition through a successful sale of his company Slockit in 2019, and is currently this co-founder and CEO of Corpus Ventures and Tokenize.it, and an active business angel. Really looking forward to that. Welcome, Christoph.
So great to be at such an online conference. It's a nice experience. It's good to see so many people attending. So since time is short, let me get straight to my presentation. So let me share my screen with you. So to speak about Tokenize.it today, but still want to give you a short backstory and then what you can do with it. In the journey, I started with Bitcoin in 2013, and I think in the Ethereum community, I'm not a Bitcoin maximalist, but I still like Bitcoin a lot. Even though I know there's a lot of tension sometimes in those ecosystems, Bitcoin is a great asset in terms of it does not change anymore, with all the good sides and the bad sides about this. But Bitcoin was always about the digital ownership. When Ethereum was created, and I joined the Ethereum Foundation in summer 2014, it was more about, let's create a new platform where decentralized applications can be built, which, for example, can be a token. So the whole idea about token was already in the white paper. Some people cannot imagine, but in 2013, people started their own blockchain system just to have a token. So like PrimeCoin, Namecoin, and many others, just one new chain per new token. And Ethereum basically stopped that on Ethereum, you can just launch as many tokens as you want to, having one safe infrastructure. As you already heard, we did this with the DAO, which raised 150 million at the time, or 160, depending on the Ether price, which at the time was the largest crowdfunding ever. You know the story, it failed. Technically, there was a bug in the smart contract. In the end, we got a hard fork of Ethereum. But what we learned during that time is, you see this little dot here, this 166, this was a DAO. Afterwards, everybody was using tokens to fundraise. You could see that fundraising through a token is just so straightforward and easy. So that's why you saw those ICO booms with a lot of scam projects, really bad projects, and even worse projects, but some good projects. But we saw that the fundraising mechanism of using a token to raise funds was so seamless and straightforward that this is what people were using and looking forward to. But you also see in this graph, end of 2018, it was like coming to a halt. And this was mostly because of the SEC. We already talked about SEC. SEC is still very active and still trying to stop us in some way, but we seem to win the fight right now. So it's really getting better. So, but people were going to the lawyers and saying, well, we need to make this thing legal and making a security token. And there are some good security token projects, but even they failed far too often. One reason was they still had this problem of separating the legal right and the technical token. And there were many issues with it. So we learned over the years, and with all the learnings, we created something we call a GmbH token, because we're currently focusing on the German GmbH. Midterm, we're trying to also go to other countries. We're currently opening up Austria as well. So hopefully in 5 years or so, we will all over Europe. It's all kind of legal entities, but for now, German GmbH. So let me give, the next slide will be in one slide, condensed knowledge about what it is legally and technically. So if you only understand the next slide, I'm very happy with this outcome. And then after that, I will just quickly show you some main applications, what you can do with it. So what is the GmbH token legally? So first statement, you cannot tokenize a real GmbH company share. This is only done to the notary. The notary is basically having right access to the commercial registry called Handelsregister in German, and just not doable. But what you can do is have profit participation right, or in German we would say Genussrecht. And a Genussrecht or profit participation right can have the same right, economic rights, as a shareholder, being dividends, so when the company dividends are paid out, exit proceeds when the company gets sold, liquidation proceeds. So every economic right a shareholder has, a token holder has as well. That's, I think, is the most important part. Get also an information right, plus he has the right to give, the token holder has the right to give the token back to the company and receive an actual share. And if you combine this knowledge, all economic rights of a shareholder plus conversion right to actual shares, it's all you need as an investor. If you really need like voting rights, which is the only thing which is missing, then you just convert to actual shares. So this is what the token is legally. Technically, it's an ERC20 token on Ethereum, plus some admin rights. So the CEO of the company can mint tokens or burn tokens. Optionally, there can be an allow list if wanted, that if the CEO doesn't want the token to be freely tradable, they can say only people on this list are allowed to hold the tokens. For investor, you can have lockup periods where they cannot transfer the tokens. For employees, you can have vesting contracts, so they earn their token over time. With this, you have a token which is live on the public Ethereum chain and has access to the DeFi ecosystem. And some applications of this, you're currently in talks with PWN or Pawn and thinking about using the token as a collateral to give yourself a loan. Just think about this as a founder. So let's say if a company, you have a fundraising round, the money will come in, let's say, 4 months or so, and you're running out of funds. You could use your own token to give yourself a loan for the next 4 months until you finished your fundraising, and then pay it back afterwards once you receive the funds. Just purely using a DeFi protocol, completely on-chain with your company GmbH token. And all the nice things being built in DeFi right now, they will be accessible to you through this token. What is the connection? I mentioned earlier that other security tokens have this problem of that the token and the right can fall apart if there's a technically correct transfer of the token, but for some reason the legal contract was not entered into validly. There could be many reasons for this. So we're using something called Auslobung in German. The best English translation is public award. It's a simple concept. You can make a public announcement that you are rewarding a certain action. Like if you solve this mathematical puzzle, you get 1 million euro. And the counterparts, they do not need to sign this statement or contract. Only the party making the statement needs to make it, like sign it as a document. So in the same way, we're using this for a GmbH token, that the founder or the company makes a public statement that whoever is holding the token is rewarded with those rights, dividend, exit proceeds, and so on. So you have those rights based on an action holding the token, which is trivial, and not only based on a contract. So even if the contract would not be valid, it wouldn't matter. You can still say, because of this Auslobung or this public announcement of this award, because I'm holding the token, I get those rights. So you have a super tight connection between the legal rights and the token. This makes it possible to make the token tradable on exchanges, using it in DeFi. You don't need to sign any contracts when transferring the token anymore. So this is what the GmbH token is. So the token economically represents a company share. You can use it for investments, and technically it's live on the Ethereum chain with a strong legal connection. So what are the applications? Of course, people think about fundraising. And when you think about fundraising in Germany, you have the BaFin, which is like the SEC in the US, and you need a prospect. And there's a list of exceptions. And if you fulfill one of those, you don't need a prospect. The two most important exceptions to this law that you need a prospect are those. First, if you only address less than 150 investors, we call this private offer, you don't need a prospect. So on our platform, you can create personalized links for investors, including all the terms and payment details. They can, in self-onboarding fashion, close this investment. So it's very simple and nice. Just bring in your own wallet and be done with it. The other one is up to 8 million euros you can raise using a so-called BIP, Basisinformationsblatt, or key information sheet, and having someone with a broker license. So we have a broker license under a liability umbrella, and so we can offer the service that you can actually, like an ICO in the old days, just legally compliant, raise 8 million per year using our service. This means you can publicly announce you are letting investors in, having an invest now button on your company website, and make it very straightforward. So to sum it up, what are the three applications of this GmbH tokens? First, the private offer. So you create an individual offer per investor up to 149, and with predefined terms, expiration date, ideal for business angels, family and friends, VCs, and so on. Second application, employee participation. I didn't have the time to go into details, but it's really tax optimized. That's, from a tax perspective, no better way of giving your employees some form of participation than using a GmbH tokens, with vesting, cliff, and so on. And then the last one, crowd investing, that you can let anybody invest in your company. So with this, I will close with our mission. We enable everyone to become a co-owner of a company. And if you have a German GmbH and want to raise through a token, please come to us. We can help you.
Thank you. Thank you. Oh, you were really on time. Like I've heard you speak a couple of times, and I know that you can talk so much about your mission and passion for Tokenize.it, and I would love to have more time for that. But we still have some Q&A, so we asked the audience to ask some questions in the chat. What requirements must the company meet in order to be tokenized in Germany?
So in our case, only being a UG or GmbH. And in the onboarding, all the existing shareholders needs to sign a shareholder agreement, which basically says that they allow the CEO to issue up to X tokens during the next couple of years.
And then are there any advantages or disadvantages for foreign investors?
So currently in the public crowd investing, you should address German investors, but you're allowed to let other ones in. It's called reverse solicitation, meaning if they just find you and they want to invest, that's fine. And yes, technically, globally, they can invest. Of course, there are sanction lists, some countries where we cannot operate in. And with private investments, then you're not acting through the liability umbrella or not acting with a broker. It's a direct investment between you and this person. So you can decide who you let into your company. And it's just between the two of you. But technically, everybody in the world can hold such a token, except of some sanction lists.
Thank you. I need to stop now because we have to stay on time. There are a couple of more questions in the chat. Maybe you can answer them by writing because now people are asking more and more things. But I'm handing it over to Annie again.
Thank you.
Thank you so much. I think Max also had something to say. Max, did you?
Yeah, so I have, because the topic is blockchain, I thought what blockchain I have, and the only blockchain is this chain. And I wanted to show some show to you.
Let's continue. I want to introduce you to Jan Oliver Sell. He's a managing director at Coinbase Germany, where he played a crucial role in obtaining the first ever crypto custody license from BaFin. With over 15 years of experience in operational business, investments, and structuring processes, Jan has previously worked for Morgan Stanley, Meteora Partners, and MSS Capital. He also co-founded a systematic FX trading firm and served as a COO at iFunded. His extensive background includes managing blockchain-based projects and supporting crypto exchanges in Germany. Warmly welcome, Jan.
Thanks a lot, Vicky. Thanks for having me. Welcome to the jungle. You can see my background here. It's the jungle of crypto, but there's an easy way in. And that easy way, for those of you who are not investing via VC or via some other structured product, is to buy crypto yourselves. Little explanation of what we do at Coinbase and how you can use us to access crypto and what else we have. Obviously, I need to give you a little disclaimer first. There's no investment advice in any of this. And I'm just going to give you a little explanation of what services we have to offer at Coinbase, but also where we fit into the crypto space and why it might be interesting for you to invest in directly as well. So Coinbase itself, for those who don't know us, we are the world's largest listed crypto company. We're a BaFin regulated in Germany, but regulated wherever we can be regulated outside of Germany. We are a crypto exchange and a crypto platform that holds your assets one-to-one, which is apparently not always the case. And as a result of being listed, we also operate transparently in that we have quarterly earnings calls. We are audited continuously. And so we like to consider ourselves relatively secure, but also a simple way to get involved with crypto. So here in Germany, we have a product portfolio of a number of different types of ways to get involved with crypto. You have simple buy and sell. You have more advanced methods. We also have a self-hosted wallet. It's also opportunity to learn about crypto and earn tokens. And there's also earning through staking, as well as a number of institutional products. And finally, we also have Base, which Vicky talked about earlier, which is our L2, which allows, or we're approaching sub $1, sub 1 minute transaction times now and costs. So hopefully that will give us an infrastructural basis to build out Web3. Here's a quick impression of the app. As you can see, it's in German here. We've got multiple languages, and we've got simple trade here, which is just the normal interface. So keeping it easy and as simple as possible to buy and sell crypto. And then we have the more advanced version on advanced trade, where you basically have the insight into the order book directly, and you're able to trade with fees that go down to 0.15 or even 0% maker and taker fees. So that's significantly less than you'd probably think. Here's a little more on advanced. I think let's see if this video works. So that was Coinbase Advanced. Again, that was a quick introduction for people who are a little bit more advanced at trading and want to use indicators, want to use more advanced charting. That is probably the safest way and easiest way to do that. And again, with the fees on a far lower basis than you get on Simple. So it's worth taking a look if you do trade crypto more frequently. Also available over API. So you have the full range of possibilities there. And again, it's all, at least in Germany, running against the German entity, which is BaFin regulated. So you have that protection as well. But why should you get involved in all this? Like, why is crypto interesting? I think for anyone who hasn't been looking at it over the past few years, here's an interesting comparison of Bitcoin alone in terms of return versus other asset classes over the last 10 years. And what you will see is that you have 124% annualized return, and probably the best performance across all asset classes over these 10 years, even including the years where you had significant drawdowns. Of course, that doesn't mean it's not a volatile asset. It is, and I think we all know that. But it's certainly worth considering. In fact, we did a study at Coinbase on the institutional side, looking at what happens if you add crypto to a standard portfolio allocation. If you take a standard 60-40 portfolio allocation where you've got 60% equities and 40% bonds, then add crypto into that, you end up with some interesting returns. So over the past 5 years, so that includes the recent bear market, you can see with just an allocation of even 3%, you get a significantly improved total return. And the Sharpe ratios still stay within reason. So it may be interesting to consider. And one of the other products I mentioned earlier, and Vicky mentioned it as well, product is not really a product as such, but basically part of our vision is to increase economic freedom around the world. And we hope to do that by growing the Web3 ecosystem. And I think one of the most exciting things, at least that I'm working on personally, is Base and bringing Base to the world, which is basically an Ethereum L2, which is a scalability solution for Ethereum. It's built on the Optimism stack. It's open source, and it rolls back down to mainnet. Obviously, it's scaling very well. It's growing very well. We're currently running on-chain summer, which is quite exciting. We have a lot of new projects being built because it's basically the infrastructure that works, an infrastructure that works because it's fast and cheap. And I think personally, this is one of the reasons why I would say this time it's different when you look at the various crypto cycles. I think it's an exciting time to be involved because we finally have infrastructure that works, that's quick and it's cheap, and we don't have to pay 20 euros per transaction anymore. But at the same time, we roll up to the security of mainnet. So I think it's an exciting time to get involved in the space. And there's a lot happening, and a lot being built. And I'm sure you'll hear more of it in the rest of the sessions. So thanks a lot for your attention. I hope it was interesting, and get involved.
Thank you very much. I'm currently collecting the question. And we have one: will Coinbase build a crypto app store for mobile?
Well, we have Coinbase Wallet, which is the self-custody wallet. And if you use Coinbase Wallet, you have access to the dApp store in there, which is probably the closest thing to that. It is still largely curated, so it's not purely purely decentralized. But it also gives you access to a number of dApps that work on Base, and through the wallet you have direct connection and a direct sign-in, so you don't have to sign extra messages that may be confusing or threatening.
Oh, and that's also the next one. It's an interesting one. Does Coinbase plan to apply for a banking license in Germany anytime in the near future?
Well, being a listed company, I have to be very careful about what I say, and I can't really say a lot about that. There's a lot of licensing going on anyway with Mika and all these other things. So,
for everyone in the audience, do you have 2 to 3 bullet points on why people should choose Coinbase over other exchanges? Make it short and crispy.
Well, and with the largest, I guess, with the most regulated global exchange. So with us, you've got the security of a regulated exchange, but you've got the deepest liquidity compared to any other regulated exchange, I would argue. And in the end, we're connected through Base and so on and committed to building out the ecosystem. That's really the kind of the focus. So simple, secure, safe.
Okay, then thank you very much. There are still a couple of more questions similar to Christoph in the chat, so maybe you can also take the time and go through them. And what I will do now is a little refreshment. Someone in the chat already asked about the W3 Hub. So why not showing you around? And you can mention in the comments what you like most about. So I'll just take my laptop. You can see how I'm doing my stuff from here. I'm in one of our conference rooms, and now I'll show you how everyone else is working in here. So follow me, and I'll just do it like this. So this is here's part of our team working. We have a whole big area. I don't want to be too loud, but this is how it looks like. So here's Sun. Oh, this is June. She will also speak later. Okay, following on. Oh, is this Henrik from W3.fund? Okay, what do we have? This is how it looks like. We also have, dogs. And we just go the full circle. Okay, we have more space here, and for everyone who doesn't want to be social, this person can also just sit here in the area. It's whenever I have to do presentations like the one today, I usually sit exactly here. Here's our community kitchen. Sometimes we have meetups here today. We will have one meetup on Wednesday. If you want to join with FMOS, IBC, and Celestia, you can also always come. And we have tons of these things here, which are, I don't know the English word for Kakteen, but they're fake. And we have our meeting rooms always have these fancy names. So we have Paper Hand Salon, we have the Moon Room, and we have the Legion Foyer, and we have more rooms upstairs, but I don't have the time to go upstairs now. So I hope you enjoyed the little circle session. And we're always open for people who want to come by, work from here, exchange with us, just approach us. It's an amazing space, and we have a park outside and lots of dogs. So that was the hub tour. Okay, let's move on. We have another speaker who I'm happy to introduce you to. It's Feliks Eyser, a seasoned tech entrepreneur and investor with experience in co-founding nearly 10 companies and investing in over 50 companies, and also investing in amazing background images. Feliks now focuses on early stage investments in blockchain tokenization and gaming through W3.fund. His mission is to support aspiring founders and foster a strong network. Warmly welcome, Feliks.
Thank you very much, Vicky. Thank you for the tour as well. What people couldn't see is that we actually have 3 stories. So you just saw one story. There's like 2 levels above that, and there's so many events happening. So if you happen to be in Berlin, swing by the space, check it out, come work from there, or join one of the events. So on my content part, in a gold rush, should you sell picks and shovels, or should you dig for gold? To answer the question, I want to tell you a story. You all know this guy, at least by name. His name's JP Getty, one of the American oil tycoons, right? So he's like kind of the Vitalik of the oil industry back in the 40s and 50s. But I want to tell you a story about his father, George Getty. And this guy used to be a lawyer who wanted to become rich. This is why he moved his whole family to Oklahoma. There was a big oil rush happening, and he wanted to be part of it. So he went to Oklahoma and bought this little piece of land just outside Tulsa. It's called the Glen Pool. So he's like this first-time entrepreneur, this is his first venture, and he starts to build oil wells. Actually, he builds 43 oil wells. You can see some of them here on the picture. Out of those 43 wells, what do you think, how many ended up producing oil? 42 produced oil. So amazing track record. If this guy was a VC, we would hire him right away, investing in 43 companies, and 42 of those turn out to be unicorns. That's a pretty great track record. And that laid the foundation for the family business that his son took over, who expanded over the next decades and turned himself into the wealthiest man on the planet, believe it or not. So in a gold rush or an oil rush, you can actually make money by digging for oil or gold. And we think the same thing at w3.fund. So we think there's a new gold rush happening at the moment in the technology space, in the internet. The internet is redefining itself. Web3, the new online, will be on-chain. So we think a lot of value is going to shift, and there's a kind of gold rush. And there's different layers where you can invest in that space. So we see it this way. There's the infrastructure layer beneath everything. That's the blockchains itself, the L2s, the developer tooling, the compute networks, all of that. And those are kind of the picks and shovel businesses. And this is where most of the activity of the VCs has been going for the last few years. At w3.fund, we believe that most of the value in the future will accrue on the application layer. So those are companies who offer tokenization, like Christoph's company, for example, who offer on-chain gaming, payments, marketplaces, even on-chain social media. So we believe that the application layer will produce more value than the infrastructure layer over time, and that it's time that people build out applications on platforms like Base, but also on other ones. So we believe that this is the new kind of gold and oil. And this is why at w3.fund, we specifically invest in that application layer. So we've invested in 19 companies so far. Those are our little oil wells, so our 19 like holes we put into the ground to see if there's any value. Actually, 5 of those are already producing value, are already like generating a little bit of oil and value to our investors. If you want to find out which 5 already are marked up in the portfolio, you can request our fund deck through the link that Annie shares in the chat, and we will share the information with you. The second thing I want you to remember is that we're not only investing but building this ecosystem. And you saw W3 Hub, which is a great example, right? This physical space in the heart of Berlin for builders. But we do much more than that. On the one side, we invest in companies. On the other side, we build things like the W3 Hub, a lot of events, our online channels, our podcasts, newsletters, all of that. And that helps us generate deals. And it's actually kind of the same what JP Getty did, right? He was digging for oil, but he also built all these adjacent companies to create more value. So he created refineries, created storage facilities for oil, pipeline, railways, even gas stations. And we see it as kind of the same way. We invest in this ecosystem to create more value for the community, but also for the fund. So we believe by doing this, we create a kind of flywheel for value. So we generate more deal flow through all of the activities, the events, the content, the physical space that enables us to pick the best companies and win deals, and that generates even more awareness. So this is how we think about our flywheel of value. So if you take away 2 things, we invest in Web3 applications, the new kind of gold and oil, and we build an ecosystem around these activities. Quickly on the funds, the micro fund, 25 million maximum size. We're doing our final closing now. So if you're interested in investing, reach out and request the link. Request the deck through the link. We're going to invest in 40 to 45 startups. You see, this is the playbook that George Getty used. He did like 43 deals. We're going to be in the same area. Hopefully, we're going to hit the same ratio and produce 42 unicorns down the road. Let's see. If you want to receive the deck, please fill out the form. And with that, my time is already over. And I thank you for the attendance. It's amazing to see so many people in the room. I think we had like 200 people at the same time here. It's amazing. Thank you very much for attending our online conference. Agenda item is our investors panel, which Max is going to facilitate. And Max is the founder of Blockstories. This is a German crypto newsletter that helps thousands of readers understand the latest technology, the latest developments in crypto and Web3. Max also serves as venture partner of W3.fund, and he's going to host our investors panel to get like different perspectives of people who are already investing in Web3. So with that, I'll hand it over to you, Max.
Thank you also for hosting this fun conference. Really nice. This panel will be about the key question of why professional investors should invest in Web3. And since there's no single type of professional investor, we have gathered quite an interesting group of people who bring unique perspectives to the table. So first in line is Michael Oschmann, who is the CEO of Müller Medien, which is a big German family business. which is also active in many different areas like broadcast or SMB marketing. And they're also active investors, backing companies themselves, but also investing in first-time funds in new business areas like w3.fund. And last sentence about Michael. I met him once and he turned out to be one of the most curious people I ever met. So I'm super delighted to have him here. Next in line is Tim Koschella, who is a serial entrepreneur and investor since 2008. His current company is called Kayzen, which is a global mobile real-time ad platform. And he described himself to me as a crypto curious, but not deeply involved. So it will be super fascinating to hear his perspective on why he invested in w3.fund. And last but not least, there's Tomas Kacerovsky, who is working at the leading investment bank Wood & Company, which focuses on Central and Eastern Europe. And he has been a crypto investor since 2016. So I guess that qualifies him somehow as an OG. And at Wood, they have founded a Web3 focused fund of fund called Wood Blockchain Plus. And this fund of fund is investing in liquid market making and also VC crypto funds. So as a summary, we have three different perspectives for this panel. We have the VC / corporate, we have the business angel perspective, and we have the institutional investor. And since I was told that this panel is only about 10 minutes, so we really have to keep it short and sweet. So I only want to focus on two key questions. So the first one obviously is, why did you, like the three of them, decide to invest in w3.fund? So what has been the underlying investment thesis? And second question is, are you also actively exploring Web3 or actively investing in the space beyond your position as an LP in the fund? So I would start in line how I presented the panelists. So Michael, if you would go ahead and share your perspective on why you invested in w3.fund.
Let's make it very short. So we are a family company, and our job was really to turn around an existing business. So that was Yellow Pages, and we turned it into a subscription business for small businesses. And for that, we always need some input. Concerning input, we always try to get in some trends. And I think obviously Web3 is a trend, as AI is a trend. But we think Web3 is more important as a trend because it really takes some areas of trust, which we also can bring into our 60 plus radio stations. So that the topic is very important for us. Second, it's a first-time fund. We love first-time funds because there's a lot of energy in first-time funds. And this is an enhancement as well with a network effect, our network, which comes with that. So we saw Vicktoria, we saw Andre and all the other guys on different stages and panels. And we thought those guys, they have the energy to do that. Also, Feliks, we have been a very big competitor to Feliks, and we had a lot of respect for each other. So to do something with a former competitor always gives another flavor to build new markets. And maybe that's it for me, why we were very interested into doing this. It's not our only Web3 investment. We have two other funds, but I think this is the most funniest ones.
And you also as a private person, have you been also actively exploring the space, like investing in meme coins or NFTs or something like that?
I bought some Bitcoins way ago and discovered that I can just buy some drugs or weapons, so I didn't spend them. So that was a good decision by that. And we also have some artworks.
Very interesting. I might come back to that later on. But now next in line, Tim, would also be super interesting since you described yourself as crypto curious, but not too deeply involved. I also think that might be due to your operating duties as the CEO of your company. But let's explain to us, please, why you invest in the w3.fund.
Yes, happy to share more. I'm a tech entrepreneur, and I've been founding and running companies since 2008 in the Web 2.0 space. And I'm a big fan of focus, and I keep focused on what I do best. And I don't think I understand the space well enough to pick my own investments, but I do like to invest in startups. It's part of my capital allocation. So I chose to invest into the W3 fund to do that for me, but also to give me access to opportunities that I may want to do follow-on investments myself at a later stage, and also to learn a bit more about the space. So far, I've been my exposure has been limited to buy and hold Bitcoin and Ethereum. That's as far as my other investments in the space go. And yeah, I've been very happy. I also like to invest in entrepreneurs, and I think the W3 fund is more run by entrepreneurs than by fund managers. I'd probably be more skeptical if this would be a classical VC fund.
And given your experience as a Web2 founder, what do you exactly find compelling about the vision for Web3?
Well, I think that eventually there will be a lot of things that will become, a lot of the projects will unfortunately become irrelevant. But there will be a few, and there are, many breakthrough successes already, and there will be more. So I think the diversification of being invested into many assets, if you do not know which winners to pick, also makes sense from an investment thesis. There's a general idea of portfolios, but I think in the W3 space, perhaps it even holds more true because of the type of business models around.
And Tomas, now coming to you, you've been investing in the crypto space for quite some time now, so it would be interesting what has been the thesis behind the Wood & Company launching this dedicated fund or fund of fund to invest in the space, and also how your individual investment thesis evolved over the last years.
So thank you for having me, first of all. So basically our thesis was that there's a new market that's pretty inefficient. Many people, including many corporations and investment banks, are scared to invest in it. That, for example, Jamie Dimon from JP Morgan Chase said that he would fire any analyst that would be investing in such space. So for us, it was an opportunistic bet, because in a traditional markets, it's a zero-sum game. So basically you're fighting 300,000 white shirt wearing analysts that are glued to their Bloomberg terminals, and they see all data. But in this space, and especially in the liquid markets, you actually can find out a lot, and you're not competing with the whole world. So basically you can avail this inefficiency. And at the same time, we are running a fund of funds. So we are investing in another crypto funds. It was in 9 so far. And what we've seen, because we meet new funds every other week, and they all been I don't know what Feliks said, everyone wants to sell shovels, but at the same time, it seems that everybody is selling shovels. So you're basically in the marketplace and nobody is selling any product or application. Everybody is selling shovels. So that's too much of a good thing, I would say. And we thought that the infrastructure is already there. If you want to build an app, you can do it. Many developers and founders, they prefer to build new infrastructure, just infrastructure for infrastructure, because it's easier, because you don't get to get the reaction from the users. So this application layer that W3 investing in, for us, it's let's do it. Let's be brave. Let's use what, for example, Coinbase just built with their base layer 2. So shout outs to them. I think they're doing a great job. So we think the tech is there. We've got the means to do it, and let's support the funds that can actually deliver and invest in founders that can do that and bring the world on chain.
Are there any specific use cases or verticals within the Web3 space that you find most compelling currently?
Yeah, everybody is always talking about multiple use cases, but from the perspective of someone from an investment bank, we get paid €2 million for the IPO, initial public offerings, for a stock company. And if there's there's this site called pump.fund where every 2 seconds a new token is launched. And so there's a tradable secondary market liquid asset that could be produced by some idiot in a garage, if I may use this slur. That's the move from 0 to 1, let's say, if we want to use this buzzword. And just let's see what business models can be built, using this database what blockchain basically is. And I think that, we usually talk about like, there's the use case, what should be built, but the market will take care of it, and the means are there. And I would be scared to not be invested in such space.
Interesting. And Tim, coming back to you, because you started out saying that your approach is following more like diversification, investing in different areas. What would need to happen for you to allocate a bigger size of your overall portfolio into crypto? Like, how do you think about this question when it comes to, okay, how much of my portfolio do I invest in AI, in crypto, and other verticals, and what would need to happen to increase allocation for crypto?
I think I would need to be more into the space myself, because I like to understand what I invest into. And the better I understand it, I think the more capital I would allocate. And understanding is a function of how much time I invest myself. So I think it's more about time.
Okay, so we have to invest and build the winners of the next decade in order for you to see them and then become more confident in allocating a bit more of your portfolio. Michael, last minute. I remember our conversation also about how Web3 could be incorporated into your own company from a technology perspective. How do you think about this now over a year later since we had this conversation? And have you made any progress in doing so?
We have no progress on that side. So we're still watching the deal flows and still think about use cases. I think this is something which is maybe really missing, the big new use case. We see that with the rising AI in the media space, there will be an abundance of content. And I think there the trust element or participation in content creation could be some of those use cases, but there's nothing specific right now.
So still, time is up. Perfect. So to sum it up, all of you quite curious, but still eager to see the first applications and real use cases, maybe beyond like stable coins or speculation to evolve in order for you to grow more confident. But it was really interesting to get your perspective. So thanks for participating and sharing your insights. And I guess we still have a few minutes for Q&A, if I'm not mistaken. So let's have a look at the questions.
So there is a question, what do you think global tokenization ownership will become widely adopted?
I think I pass it on to the panelists here. So has anybody of you the perspective on that one?
If I may, I think that it's a question of a couple of years. We see what BlackRock is building with their on-chain fund build, and it's going to be, in my opinion, like top down. It's not going to be that like we like small customers are going to adopt that and we will drive this change forward. It will be basically that there will be like players such as BlackRock, and the investors would still come to them. They will actually seek tokenized products, but these products are going to be stored in the custody of BlackRock, and maybe it's going to be a process from there. So I think that we are going to find ourselves in a situation where we already are there, but many people just don't choose to actually to do self-custody, but it will be on-chain, it will be tokenized, but it will be the gatekeepers are going to be the same, the incumbent financial institutions.
We move on. Thank you again. And let's connect afterwards.
I hope you're enjoying everything so far. We will start with the next presentation, Manuel Stotz, who is the founder and CEO of Kingsway Capital, a 1.5 billion frontier market investment firm. He has led the company since its founding in 2015, focusing on customer franchises in emerging markets like Egypt, Bangladesh, and Pakistan. Manuel also serves as a council member of the TON Foundation, and I'm really looking forward to hear your presentation.
Thank you, Vicktoria and Feliks and team for inviting me. I'm very sorry that the line, my picture is a little blurry. This is my first Zoom call of the day. I do have a real head of hair, so I'll try my best to make it up with good content. So I'm the founder of Kingsway. So I'm an entrepreneur who happens to be an investor originally from Germany, but in London for 20 years. I came originally out of Goldman Sachs and started Kingsway 11 years ago. We actually managed close to $5 billion today, but who's counting? The first billion is the hardest. And as per the introduction, our TradFi roots are in frontier and emerging markets. And this is actually what led us into blockchain, Bitcoin, crypto, Web3 about 4 or 5 years ago. And now today, roughly half of our assets, so close to 2.5 billion, are in crypto, basically. And, I'm not a cypherpunk. I'm not even an early adopter. I wish I was. But I'm one of the biggest, investors in the world in poor countries, effectively, right? We call them frontier emerging markets. And I've noticed that the adoption of crypto is like 10 times higher in some of these countries, right? We've got roughly 40% or so of the Nigerian or Vietnamese population owns or has engaged with crypto. And globally, of course, there's still a lot of criticism and skepticism about the asset class. In the West, I think the penetration is around mid-single digits. The critics are saying it's a solution looking for a problem. And of course, I vehemently disagree with those criticisms, but I'm humble enough to concede that the real world use cases have been a little bit disappointing so far beyond, speculation, leverage, and casinos in the Bahamas, right? And we're not interested in that at all. We are interested in the bottom 3 billion people who are basically unbanked or underbanked. They don't have the US dollar. They have, for instance, the Zimbabwean dollar. I've got $100 trillion in my pocket, Zimbabwe, and it's a real note, right? And now these people have smartphones, and guess what? They're using those smartphones to get out of the local fiat currency into US dollar stablecoins, most popular, Bitcoin, Ethereum, Solana, Toncoin. And everything is better than the local fiat currency. The bar is pretty low. And one of our key insights, I guess, we've had that at the nexus of crypto and these frontier markets, we're finding all the real world use cases that exist in spades. The future is already here. It's just not evenly distributed. And we're basically finding not only local or regional, but kind of global winners emerging. And in my humble judgment, those global winners are unlikely to have a giant US or China competitor, as the superpowers continue to have teething issues with blockchain. And we also find these global winners typically ahead of Silicon Valley, because Silicon Valley isn't looking in places like the Philippines, for instance, right? And I must say the capital that we manage is roughly 5 billion, very institutional business on behalf of many leading US endowments and foundations, many Ivy League schools, institutional grade family offices, family of Sequoia and thereabouts, right? And our first entry into the space was Bitcoin. We do 2 things in Bitcoin, really. We I wish we could just buy Bitcoin and hold it, but our clients can do that themselves. So we hopefully have, needs to be better than that. So we are, big in Bitcoin mining and in the Bitcoin Lightning ecosystem. And outside of the world of Bitcoin, I'm the biggest shareholder of a company called Animoca Brands. We own around 12% of Animoca. That business was funded last year. It's perhaps the leading blockchain gaming company in the world. Last year, backed by, Saudi's Neom investment fund. So sovereigns are getting into this. Also Temasek, the Singaporean sovereign wealth fund, is a shareholder alongside Sequoia China and other reputable investors. We own around 12%. The business was funded last year at around a 6 billion valuation. If this is the bear market, I want to see the bull market. Together with Animoca, we've been conquering sort of early stage gaming projects. And I'm on the board of blockchain.com, which is maybe sort of a quarter of the size of Coinbase or so. I'm also the biggest backer globally, and also on the board of Ton. Ton is the layer 1 blockchain built by Telegram. And for everyone who uses Telegram, you can add me, and then I will happily send you 1 Ton coin for free. And so basically what I've been trying to do is focus on what I would call $1 trillion ideas. Clearly, Bitcoin is a $1 trillion asset, and so we're big in mining and Lightning. I strongly believe that the wonderful world of digital property rights, blockchain gaming, the technology that's used there is NFTs, but it's not necessarily something to do with digital art. It's basically used for owning your, in-game item, your gaming character and skin and sword and so forth. Very much focused on that. And I think that's a $1 trillion space in the making. And I also think Ton is a $1 trillion idea. And happy, of course, to talk a little bit more about those two. I also brought Animoca into Ton. So you might have seen the announcements. Animoca is now a big investor in it, one of the biggest validators, and also has, basically now bringing over a lot of their, 400 or so blockchain gaming projects into Ton. And what Telegram can do is, of course, take this to the whole next level in terms of user interface and user experience. And so very, very excited about the nexus there. My key message for today is that, this is a very serious asset class and a very serious people in that asset class, like hopefully myself. Clearly institutional adoption is relatively nascent, but it's happening. The Bitcoin ETF arguably marked the proper, beginning of institutional adoption for this nascent asset class. And so that's only really, 4 or 5 months ago. But now, of course, we got the Ethereum spot ETF approval in the US. And we have a nation state adoption. The Abu Dhabi government is mining Bitcoin. Of course, El Salvador, which I appreciate, is a tiny country, but, still nonetheless very important, I think, as a first, sort of penguin, if you wish, to make Bitcoin legal tender and also mining it as a sovereign and exempting it from capital gains tax. I would not be surprised at all that in this cycle we see other countries following suit. I think Argentina is definitely worth watching. And yeah, so this asset class is here to stay, no doubt about it. It's seeing institutional adoption, and everyone needs to have an opinion on it. And even I think in the age of AI, the importance of crypto will be very, very important for a number of reasons I got into in the Q&A. My time is up. I'm very excited to be part of this forum and look forward to answering any questions.
So thank you for sharing your all the things that you're working on and your experiences. We have a couple of questions. Let me start with the first one. How do you see the institutional adoption of crypto overall?
Yeah, I mean, ultimately, I think all eyes are on the US, right? Given it's by far and away the largest capital market. And I think, institutional investors from the US have, so far, until the advent of the ETF, basically got exposure through their venture capital, managers typically. That could be an Andreessen or Sequoia or someone like this. Some of them have now actually coins on their balance sheet, like, some of the US university endowments we work with have actually been able to also directly engage with, the underlying on a spot basis. But now I think with the, ETFs, it's of course much, much easier, right? The form factor of having, a security like a stock just makes it so much easier because all the pipes are open, right? And now you saw the Wisconsin pension fund buying 150 million worth of Bitcoin. And, a lot of US hedge funds, expressing, their positive view on the sector by buying the ETFs. And I think the ETF in Ethereum will also be super exciting. I think, once Wall Street properly understands what this is, which still we shouldn't forget we're in a bubble, right? It's not the case yet. I think, Ethereum will be $1 trillion asset, which would be only 2.5x from here, right? Not an outlandish prediction, right? Now, outside of the US, I think there's clearly, a couple of epicenters in the world. I would highlight, Asia in particular. There's different, there's a lot of users, of course, given it's by far and away the largest, population on the planet. But also, developed Asia, let's say Japan, made Web3, a cornerstone of the entire economic strategy, right? I mean, I'm old enough to remember that the biggest gaming companies in the world used to be Japanese. When I was living in Germany as a 12 or 15-year-old, I bought a PlayStation, a Nintendo, and a Sega Mega Drive, right? And what happened with Web2, Google and Apple making all the money from mobile gaming through the App Store. Now with Web3, the Japanese have realized it's their turn again to come back on top. And the prime minister just ordered their kairatsus, to invest into Web3, couple billion. And so, for instance, in Animoca's case, Animoca is big in Japan, MUFG, largest bank in Japan, and not that much smaller than JP Morgan globally, is the minority partner of Animoca Japan. And Mitsui took a last bite of their convertible in the Temasek round already just over 2.5 years ago. Now, the Middle East is another area to highlight. As I said, they're leaning into, this technology. As you know, Dubai has basically become one of the big crypto capitals of the world. Abu Dhabi government is mining, and they're definitely basically very welcoming from every side of the industry, from regulation and just making their basically city-state sort of home to some of the world's leading crypto projects. And I've made a modest career about not only judging what is a good business or a good founder, but also what's the country business model, right? And I own 1.5% of the entire Bangladeshi equity market. Now, granted, it's not a small market, right? Now, the key question is, what's the UAE business model, right? The simple view is sort of oil and tourism, and that's not untrue, but the more profound view is turning sand into property billions, right? Ambani, Asia's richest man, just paid $180 million for the end of Palm Villa. And over 10,000 millionaires have washed up in Dubai in the last 30 months and counting, right? And now we're going to see the biggest pivot of all pivots, probably in our lifetime. It's not a business, it's a country. The kingdom of Saudi Arabia has realized that the UAE business model is better than the traditional business model. Instead of basically pursuing the traditional business model, pumping oil and buying treasuries, still pumping oil, but no more treasuries, turning sand into property billions. MBS is a big gamer. They're trying to buy everything there's to buy in sports, try to buy the Formula One, of course, what's going on in football or, golf. I'm hearing tennis is next. And Neom just invested in Animoca, and I think that's a good sign of the time. So there's not only institutional, but so sovereign institutional adoption.
Yeah, thank you very much. That was very, very good. And just looking at the time, we have way more questions in the chat. So similar to the other speakers, if you have the time, take them to answer it. Moving on to the next speaker, we have Martin Leinweber, who is the digital asset product strategist at MarketVector Indexes and the author of Mastering Crypto Assets. MarketVector Indexes manages approximately 47 billion in assets, spanning hard assets, international equities, and fixed income markets. The company collaborates with over 30 exchange-traded product issuers, and is a regulated benchmark and is administrator in Europe, registered with BaFin. Oh, a lot of words.
That's a lot. Yeah, thank you very much, Vicktoria. So I'll share my screen. I'm an old school guy. I'd like to talk about the success of the spot Bitcoin ETFs today. And I think, the ratio in asset management is assets under management. And what you see here is the AUM distribution over time of the 9 newborn ETFs, and also the Grayscale GBTC, which transformed to an ETF. And you see we have roughly $55 billion in assets under management, which is a huge development. And also in terms of flows, we had over $50 billion in flows this year so far. And I think most of us thought maybe 10 billion over a year is a success. And we already have 15 billion now. Now, the thing is, how does this relate to other TradFi vehicles? I think that's the interesting part, because we already talk about huge numbers. And if you relate the Bitcoin ETFs to the more TradFi related vehicles, you see in the left-hand side, the total launches of ETFs over the last 30 years, over 5,500 in total. And you see the assets after 1 month. And here the orange bars are the Bitcoin ETFs. And you see IBIT, FBTC, for example, the top two, they are crushing everything. Yeah. So, for example, GLD, that was the first gold ETF, or QQQ, that's the Nasdaq ETF, that's a monster. It's already twice or 3 times the size the largest spot Bitcoin ETFs have done, between 3 billion and 4 billion after 1 month. And even if you look on the right-hand side, when we talk about the BlackRock ETF, you see the IBIT hit the $20 billion asset mark in just 137 days. And the second most successful one in TradFi, the JP Morgan Equity Prime ETF, did that in 985 days. And that's pretty important, because when we talk about the large players, for example, BlackRock, they have over 1,000 ETFs outstanding. The IBIT makes over 17% of the total trade volume. And so it's no wonder that the large asset managers in the US are now keen on crypto and want to do more. And it's not just about assets under management. Also, if you look at trade volume, liquidity, institutional investors love those ETFs, because it's a very anonymous way of getting in and out. If you want to do $50 million, $100 million clips, you can easily do it via the ETFs. And so that's very important. If you want to attract more institutional investors, they need the right vehicle. And they found it with the US spot Bitcoin ETF for sure. Now, Manuel also talked about the institutions coming. If we look at the holders, I have to say it's more about the retailer. So 85% of the spot Bitcoin holders are retail. Only 3% are held by the IRAs, the advisors in the US. So it's still clients have to call the advisor in order to get their trades done. Yeah, it can't be done on a solicited basis, but that's just a question of time. And when we talk here about the asset managers or institutions, it's primarily the hedge funds. So they do the so-called cash and carry trade. So they buy the spot Bitcoin ETF and trade short the future and trade the basis, so to say. Yes, we have the state of Wisconsin. That's a big headline, bought Bitcoin for their retirement system, but it's still the minority. But the good news is, overall, with the spot Bitcoin ETFs, we have the rails to onboard the larger institutions in the US. We just have to get more regulatory clarity. We have that in Europe, but in the US, it's still just about the Bitcoin ETF and maybe in July about the Ethereum ETF. And so for a lot of investors, there's still not enough clarity there. And my hope is that we will get that next year after the election. And I can easily imagine then that we get the year of the crypto ETFs. And then we don't speak just about maybe 55 billion in those ETFs. It can be in the hundreds of billions. Yeah. If you look at the large ETF providers, the NASDAQ ETF, for example, it's around $250 billion large. And so you see, if more liquidity gets into these ETFs and the spot Bitcoin ETFs, it's very easy to reach abnormal amounts. So that's it. Yeah, my 6 minutes are almost over. I have some additional slides if you like, or I'm here for additional questions. What's interesting is how dominant the US is. These are flows by exchange country. Yeah. So in Europe, we have not the ETFs, we have the so-called exchange traded products, the ETPs. They were quite similar. It's a different legal structure. I don't go into the details there, similar to an ETF. But what you see is basically we had positive flows in Hong Kong with the new spot Bitcoin and Ethereum ETFs there. We had a little bit of positive inflows in Brazil and Australia. In Europe overall, however, it was, you can say, if you add up Germany, Sweden, Switzerland, it was negative. So that you can say it is primarily about the spot Bitcoin ETF. Yeah, so United States with flows of 16.8 billion and assets under management of 73.8 billion. The number is so large because it includes the total assets of Grayscale. But you see, and I think also Manuel alluded to it, how important the US is. And I can imagine that the market share will rise continuously if we get more ETFs there as well.
Very interesting. Thank you.
The next question is quite special. How was the cryptocurrency mined before the invention of Bitcoin? And I think we have a special guest today to answer that question. Yes, we have. Hello.
Hi. Hello. Let me show you how it was done. Back in my day, we mined for gold and precious metals with hard way. No fancy computers, just sweat and steel. But today you folk mine with this. No dirt, no sweat, just lots of electricity. So whenever your digital wallet feels a bit heavy, remember, it's all thanks to the magic of technology and the hard work of many clever minds. Understand? So, sorry. I get back to my hard work. Bye.
Goodbye. Thank you for showing us how far we've come. From pickaxes to pixels, mining certainly evolved.
Let's move on. Now we have Tom König here on stage. He brings experience from two areas, actually. So operating Web3 infrastructure and working in traditional finance. And in the finance world, he recently led the engineering team of a 6 billion multi-family office. And then merging with w3.fund, W3 Labs enters the space with this builder mindset, providing staking and tooling to more traditional customers in terms of user experience and regulatory requirements. Warmly welcome, Tom.
Thanks, Vicky. I want to talk about staking, specifically about some intricacies around native staking in Germany. And when I say staking today, I am also referring to the general participation in proof of stake consensus, including validation. And Germany shall act as my benchmark, so to speak. It's natural to me, but many of the challenges observed apply to globally, I would say. So to get started, looking at the status quo, we have seen products in crypto historically have been built by crypto native users for crypto native users. It began with the cypherpunk movement prior to Bitcoin. It's obvious that none of the reporting required for compliance has been natively encoded into blockchains. Yet here we are, crypto emerges as its own asset class, and staking, which we are talking about here, almost becomes this distinct sub-asset class. And there's this dangerous analogy of this being the analogy to a government bond market, where here the blockchain network would act as the debtor to the staker. That being said, I'd like to dive into some exemplary questions that are faced and challenges imposed when starting these operations. Specifically, when starting staking operations, some, obviously not all networks, require you to run a validator to participate in the consensus as a staker even. And similar to mining operations and proof of work, not as far back as to the pickaxes, but in proof of work networks, this could be classified as a commercial activity. And this could lead in turn to trade tax implications, which might be problematic if you're running this operation from a wealth management holding that is otherwise not commercially active and shall not be subject to trade taxes. Then the natural next question would be value-added taxes. Do they apply? The validator being the service, who exactly is the customer? Is it the foundation behind the network? Is it the network itself? Is it the users who pay for transaction fees for them to be validated by the validators? Might again refer back to mining. Similar questions, of course, has been asked. And the general problem here is that we once you start these operations, questions will be asked. And even financial authorities, they don't have a central guideline in at least Germany. They don't to follow here. And then this leads us to more of the mechanical topic, Once you start the staking operations, and we want to use the analogy of the bond again, the staking rewards would be like the interest payments on a bond. Once you receive those payments, that's a taxable event. And there's the catch. The tax obligation that is being created in that moment is denominated in euros, while the reward most of the time is being paid in crypto tokens, and there's no native way of making that transition. So effectively, you, the staker, is holding a foreign currency risk at this point in time. And that's not even all, but also staking rewards have a much higher frequency of payments, which leaves you with so from time to time, even questioning your life decision of staking in the first place. But if you don't, and if you accept this reality, you will find yourself in the situation of the requirement of reporting the taxes. And even that is far from straightforward. Essentially, you need to, I guess I've hinted at it already, keep track of every staking reward converted to euros at the time of receipt and reporting these numbers to the financial authorities. This can be manageable if the tools exist for doing that. But if they don't, it's immensely difficult. And this is even more so if we talk about, and I guess this list is endless, more intricate topics such as MEV. But in general, regulation is on the horizon. We do have the problem that from time to time, there are no clear answers here. We are on the way. We have MiCA, which acts as a starting point. We still lack many details when it comes to staking. Hopefully the next version will bring even more clarity in that regard. But then there's the next perspective. Depending on the entity that's running these operations, there might be other regulatory frameworks applying, such as MA risk or DORA, the upcoming one, which would leave you with the task of navigating these different regulatory frameworks and their interoperability, which is a challenge. But that's the challenge we would also see an opportunity in as W3 Labs. And that's exactly our vision, building this next generation of staking, enabling this by embracing regulations essentially around staking and implementing a user-centric approach. We invite any partners to join us on this journey, provide feedback, insights, and support. So with that, I'd like to thank everyone for the attention and would be open for questions.
Thank you very much. Thank you, Tom. Maybe one question also from my side is, who are the people who are interacting with W3 Labs? So what is the audience that you're speaking to?
The primary focus would be institutions at this point in time, like banks.
I just have a comment here from someone who says it gets even crazier if you look into taxation of liquidity provisioning and liquidity pools.
Exactly. It was a not exhaustive list. Yeah.
Okay. Then if there are currently no more questions, and now I would move forward with the next speaker, that I'm really happy because she's also literally sitting in a phone booth right next to me. Thank you, Tom. Oh, this background, June.
I decided to keep it. I thought, okay, maybe I think it's very fitting. I think we're trying to have fun here, so it makes sense to have this. I love this meme.
Perfect. Okay. Give me 20 seconds to introduce you, and then we can start with your presentation. So we have June Holderith here, who is the German outreach manager at Ledger and one of the actually very early people to support our mission at W3.fund. Ledger secures 20% of the world's crypto assets with over 6 million devices sold in 200 countries. It serves 100 plus financial institutions, and the company has over 900 employees across offices in Paris, London, New York, and Singapore. And I'm very happy that you're here, June, today. Take over the stage.
Thank you very much for the amazing intro. I have a few updates on some of our statistics. So Ledger previously did have over 900 employees, but after last year, we are actually now around about 650. So we did downsize a little bit. As Vicky mentioned, 20% of all of the world's crypto assets are held on our devices. And also 30% of all NFTs in the world are held on Ledger devices. There have been over 6 million devices sold. And Ledger was founded over 10 years ago when the market was still in its infancy. So it was by 8 synergetic security experts in the world, really determined that in this new technology, that hardware was going to be essential in adoption, as well as keeping people secure. So Ledger's mission has always been to become the world leader in digital asset security, as well as utility. So we constantly have dedicated over 70% of resources to research and development, really leading the way for all of users and communities to safely explore blockchain, as well as growing their portfolios. So one thing that I've really learned in this conference, and I think a lot of us know, is that crypto is massively becoming adopted. It's becoming widespread. We're finding multiple use cases in this across multiple different industries. But one thing in this also means that the increase of security hacks and scammers and risk of people trying to come in and steal your crypto also increases. So back in 2022, we actually had the most crypto hacks in the history of the industry. There were approximately $3.7 billion worth of crypto stolen from people's wallets. Luckily, in the last year, this has actually decreased by 54%. So last year, there was only $1.7 billion dollars hacked from people's devices. However, the number of individual hacking reports actually grew. So it didn't grow substantially, but they noticed that there were more people trying to hack these things. Luckily, people's security practices were strengthened. So, of course, as we continue to see adoption of cryptocurrency grow, it's imperative to also make sure that we are educating people on how to be in control of their own assets. And I think especially because this conference is dedicated towards investors. When you think about investors, of course, we want personal people interacting, even with any amount of crypto, to be able to safely invest. However, when you are responsible for managing millions of dollars worth of assets, this becomes an even bigger focus point. I think most people are most familiar with our USB device. This is kind of like our highlight product that the majority of people are using in the world. And one thing that we do with our devices is we really try to make sure that there's an all-in-one stop shop. So you have our hardware device that has a secure chip element. It's regulated and has the only certificate by the France Cybersecurity Association, which is the national government association. But we also have our Ledger Live app, which offers the most support for any hardware device in the industry. We support over 5,500 different currencies. This is constantly being updated, and over 4 million of our users enjoy interacting with crypto via the Ledger Live app. Of course, I think as anybody who might know our products, you can also interact with our products through so many other third-party applications via Wallet Connect. But if you are someone where you want to kind of have everything all in one place, you can also choose. We support multiple different exchanges. So we are partnered with Coinbase, we support Base. You can really, within our own application, use all of these different services and exchanges that we're partnered with from one place where you can verify the transactions in real time. You can stake your assets. And so it's really, really user-friendly. And this has become one of our biggest missions. It's also available in 11 different languages. So it has massive support for everybody. But there comes a point in your crypto journey where I think everyone starts off and your first instinct isn't, okay, I need to have a hardware device. Typically this comes after maybe your portfolio jumps or you really are deep in the rabbit hole and you have really some money, some skin in the game at this point. But when you are managing, I would say, more than $500,000 to millions of dollars in crypto, we also offer an enterprise solution, which not many people are actually aware of. It's more popular in the US, so we have over 100 different enterprise users. But this isn't just necessarily for businesses. We also see a lot of investment funds, PEs, people that are having multiple people managing this money. It really offers security, governance, and the opportunity to safely, securely, all of your assets, but from a much better overview. We've worked with a lot of different companies that have millions of dollars of assets, and you would be very surprised that they have maybe 1 or 2 Ledger devices that they keep everything on. And so the enterprise solutions are a really great way to mitigate risk, especially with governance and security internally. Some of you might have known our earlier products, so we really have been innovating from day one. We have just started shipping our Ledger Stacks, which is like our new, very, very highly awaited product. It took over 18 months from the announcement to actually have the first device shipped. It was designed by Tony Fadell, who was the designer of the iPod and the iPhone, to create really the first e-ink touch curved display. So it has the same secure Ledger technology, but it's a really great way for you to have an overview of your portfolio, interact in a really fun way, and also, have part of the culture because it's a very special device. So this is something that we're definitely really proud of. And I'm running close on time. My QR code is missing. But my name is June Holderith, so you can easily connect with me on LinkedIn. And if you have any questions about Ledger Enterprise, I highly recommend reaching out to my colleague, Romy. She's also based here in Germany and is really our go-to person for everything enterprise. Thank you so much, W3 team, and everyone for being here and listening. And if you have any questions, I don't know if I have time to answer them now, but I'm happy to jump in the chat or connect with you separately.
Due to the time, I would say anyone who has questions to June, either feel free to reach out to her personally or use the chat, so everyone can also follow up on that. I listened to a very, very interesting podcast episode about Ledger Stacks, actually. I'll try to find it and also share it in the chat, so we can now move on. Next, we have have Julius Nagel, formerly at McKinsey, and has been involved with Ethereum since 2014. So you see we have a couple of Ethereum OGs here today, and hosts the crypto podcast in German, Alles Coin Nichts Muss. Highly recommend. Julius is the general partner at W3 that just got out of stealth and invests in as an open and liquid token fund, but more on that from Julius. Warmly welcome.
Awesome. Thank you so much. First of all, thanks for having me. I think this is a great event and already got some great insights from listening to the other speakers. I want to talk to you a little bit about liquid tokens. So maybe before we get into the weeds, let us quickly set the stage. What do we mean by liquid tokens? So in crypto, many of you may have been exposed by holding Bitcoin, Ether, or any other crypto asset, or investing through venture funds, which actually for many institutional investors has been the way that they have gotten exposure over the past years. However, there's a very unique characteristic in crypto markets, and that's that of early liquidity events. So as you know, maybe out of the venture markets, usually companies stay private for a very long time. You know, they raise seed, series A, B, C, and so on until they exit via IPO and sort of become liquid. Now, for investors, this is usually difficult because then you can only invest at a later point in time in the life cycle of the company. Well, in crypto, you have this unique characteristic that many projects or protocols launch a token to decentralize at some point in their life cycle. And usually that takes place after, 3, 4, 5 years after the inception of the project. Now, what that leaves investors with is sort of access via a liquid secondary market. And thus we can invest in these assets and sort of think about what assets we want to own. Now, why are we excited about this, generally speaking? Well, it leaves us with the opportunity to generate venture-like returns without having to sacrifice liquidity. So we don't need to lock up our capital for many, many years, 6, 8, 10 years, however long a regular venture company usually takes. But we can buy tokens, and whenever we feel like the token price has appreciated or our thesis has played out, we can sell those tokens on a secondary market. Now, that's important because I showed here the slide of the overall crypto market cap. And as you can see, and sort of historically, it's been quite volatile. And, with the ability to trade liquid assets, you do not have to take all these drawdowns or sort of sell whenever, the time might come that you unlock your tokens, but maybe the market is down in a crypto winter or something. So we really have the ability to enter positions when we feel like assets are undervalued or oversold, and exit whenever we feel like the market is too heated. And this has become more relevant in the past because, as you might know, the crypto markets are heavily correlated. However, the market has really grown over the years. And now you cannot just throw a dart and pick any random assets, but you actually have to select the right asset. And so the whole research and sort of managing an active portfolio becomes more and more important. So I just added here for fun because people are always giving Cardano a hard time. Just added here the slide of the Cardano performance and the Solana performance over the past year or so. And as you can see, it really differs, right? And we believe this is only going to continue. So the asset space is maturing. I mean, I think you heard it from many speakers today. Institutional adoption is coming, but also the projects themselves are growing, are becoming more professional. The business models are getting better. And thus we believe that we will see a greater sort of differences in the prices between different projects. So in the end, the liquid market is very hard for investors to navigate. You have these thousands of tokens, and you can go on CoinMarketCap or CoinGecko and see a list. Actually, I think this is like the worst UX that we've done to ourselves because all of these things are very different and very unique projects. So it's very hard to compare all these tokens with each other just by looking at their market cap. And not just are there thousands of tokens, but there are very many different projects. So it ranges from infrastructure, base layer, like in Ethereum or maybe Celestia, all the way to the applications. And as an investor, it's really tough to navigate this market because you need the expertise to think about, okay, what is the best technology? What's the best team? You need to have the right skills and the experience to sort of do your research, get the data from on-chain, do the analysis on what you think is actually a feasible business model. And further, you also need to have the proper setup, the proper risk management, portfolio management to then be able to actively manage your assets in a portfolio. Now, I presented you all the challenges that we see in the market today, and obviously I have the perfect solution with me. So we have launched a liquid token fund where we want to give investors the possibility to access this market, not just by holding Bitcoin or maybe getting some exposure through being invested in a venture fund, but also have the ability to participate in this very interesting and highly rewarding liquid market, but sort of taking all the hard tasks away. So we do the asset selection, we manage a liquid portfolio without lockups. So we really want to give this liquidity back to investors. We're a German entity, so we're fully regulated. It's a very tax efficient setup, which we are very proud of, because often when you talk to lawyers or you talk to people about setting up such a fund, the first answer is, why don't you go to the Cayman Islands? But we've worked, actually took a couple of years to set this up. But now we're sort of in the process of launching the fund, and we're happy that we can offer it here out of Germany. And obviously, it's not just myself and my partner Philip, who we've both been in the market for over 10 years, but we're sort of merged with the W3 ecosystem because we think there's so many great synergies. And I think like this event today is a perfect example of what the W3 ecosystem can provide. So if you want to have a discussion about what we're doing, how we're investing, I'm happy to take any questions in the chat, or feel free to sort of shoot me a mail or ping me on LinkedIn, Telegram, and we can continue discussion.
Thank you very much, Julius. On time. And we have a couple of questions. We don't have the time to go through all of them, but obviously you can also answer them in the chat. But I think the most interesting one is what industries and sectors are you focusing on right now?
Yeah, sure. So a couple of things that we think are interesting. So first of all, we believe that there's new ecosystems that are emerging. So I think we heard earlier about the TON ecosystem, which, to be very transparent, we also think is very interesting. Other ecosystems such as Solana, which is not that new, but it's more maturing. So this is something where we are very much researching and investing in different ecosystems that we like. On the business model side, what we are excited about are certain deep learning applications. So basically bootstrapping a large network and using the tokens sort of as a way to solve the chicken egg problem is something that we are excited about. We're excited about certain crypto meets AI use cases. Obviously, there's a lot of hype around this topic, but some of the areas we think are very relevant and will have tremendous adoption in the future. And beyond that, we are very active participants in the DeFi ecosystem, and sort of we always see some interesting innovation taking place there. There's some tokens which are definitely interesting in the DeFi ecosystem.
Thank you very much. Appreciate your time. If you have more questions to Julius, just put them in the chat. Julius can still answer them, and we can move on with the next speaker, which I'm also very looking into. I actually love the lineup here. So next is Michael Duttlinger. He is the co-founder and CEO of Cashlink, a leading firm in Europe's tokenized asset investment sector. Cashlink's software for tokenizing security has made it a key player in the field. Michael, or Michael, but I say Michael, collaborates with regulators, banks, and fintechs to advance asset tokenization and DLT-based capital markets in Europe. Prior to Cashlink, he founded a payment service for SMEs and now regularly advises institutions like BaFin and BMF. The stage is yours.
Thank you very much. Really looking forward to it. We at Cashlink are a W3 portfolio company, and excited that I have the chance to present today. So for Cashlink, it's all about tokenization. It's all about real-world asset tokenization, I think, which is a buzzword we've seen the last 1 and 2 years really going around in crypto. I think the big story here is because real-world asset tokenization, of course, it has something to do with blockchain and we're tokenizing real-world assets. But at the end, I think it's between the traditional financial markets and the crypto ecosystem, and it's basically the bridge between these two worlds. And what our vision, what has always driven us, is that basically what's now happening is we're completely changing the way the transfer of assets work, and we're completely changing the way financial markets and the back end of financial markets work. That's why I like the analogy of saying, okay, that's what smartphones did to the telephone is what tokenization will do to assets and securities. So we will see in the next 5 to 10 years, we will see completely different ways. It will be as easy as sending all of your stocks and your assets as sending a text message. And I mean, if you look at crypto and you're coming from the crypto native space, this is already the new normal. And we get yield streams instead of one yield a year. It's a new normal. But if you look at your traditional old world, it's completely not normal. And the big challenge of real world asset tokenization is connecting these two worlds. Because bringing all this great innovation from the crypto space into a regulated space, this is the hard challenge. Programming smart contracts is not hard, but really adopting to a current regulation and then constantly adapting it. This is the key. When we looked at what the traditional world said about real world assets, it completely changed over the last years. So I think 2018, it was really a big no. It was when I pitched 2018, I was treated like an alien, saying, okay, no, you can't do this to normal assets. And now over the years, it really has shifted. And coming to this year, Larry Fink's saying that basically the whole Wall Street will be tokenized. And this is really interesting because if you look at the advantages of tokenization, of tokenizing real world assets, it's really depending on the asset class. So on the one side, we have an increase of efficiencies. So in the short term, it's just way more cheaper and more efficient if you have an asset or a security in a tokenized form compared to a traditional form. And this is mostly true if you look at structured products, retail structured products, to bonds, stocks, and so on. If you look at more the alternative asset space, meaning collectibles, real estate, and infrastructure, the big benefit is now access. Because a lot of the private market assets are not accessible today, and they will be accessible with tokenization, and we can make them more liquid as they are primarily illiquid now. We just recently published a cost study together with Porsche Consulting and FinPlanet, saying if you look at the traditional value chain of financial markets and then compare it with a tokenized form of a financial market, you can save up to 70% of the whole value chain of a security. Especially in Europe, we have a special place. We have a competitive advantage in Europe because the laws, and here also not only in Europe, especially in Germany, are the most progressive laws worldwide. Germany has from our perspective, the best regulation for tokenization and tokenizing real world assets. We have moved the gray space of tokenization into a white space with clear rules, clear boundaries, and actually you now need you have a special license in Germany if you want to tokenize something. It's a regulated financial institution like Cashlink. We are a so-called Kryptowertpapierregisterführer, a crypto securities registrar. We're comparable to what Clearstream is in the traditional world. We are allowed to be the registrar for securities on a tokenized form, in this case, mostly Ethereum and Polygon. We're connecting issuers from real-world assets like real estate, renewables, but also liquid products like bonds and structured products, then with neo investment brokers, neo banks, neo brokers, financial institutions, because we believe that the way assets are distributed will stay the same as it is now, but it's a regulated institution in the middle that then tokenizes these assets. We've just published our latest cooperation with VBank in Munich. VBank is the custodian depot bank of the most of the wealth managers in Germany. And they have integrated the Cashlink as a crypto securities registrar, tokenizer. And this means that now all the wealth managers can access the real world assets that we have been tokenizing, and then their investors can invest in it. Cashlink itself, we are the market leader in Germany. We have tokenized the most assets in Germany. As being said, we are a portfolio company of W3. Also, our shareholders is the Hela Bar from Germany, and also C3 and TX Ventures. And we have done most of the landmark transactions in Germany, ranging from KfW, Siemens, Metzler, and we also now be participating in the ECB trials with the digital euro, which is also very exciting for the whole tokenization. Looking forward if you have any questions, and thanks for the opportunity to present here.
Thank you so much. We actually have one question that I will now read out loud from Julian. Will all your security tokens issued be tradable on a certified secondary market? Or in other words, are you also building a secondary trading platform?
Yeah, so we are not building a secondary market platform. The same which holds for the tokenization process and the primary market process also applies to secondary market, meaning regulation is key. In Europe, we now have a so-called DLT pilot regime, which regulates that security tokens, we don't call them this anymore. We call it crypto securities now because of the more regulated form. They then will be able to be traded on MTF for those who gain the DLT pilot regime MTF license in Europe. And we will partner with all these secondary markets that our products, which are tokenized by us, then can be listed on these MTFs.
Thank you very much. We have one more question that you can also answer in the chat because we need to move forward. But thank you very much. Appreciate your input. We are close to the end, but we have two more really, really amazing speakers that will share their expertise. And the first one is Peter Grosskopf. He's the co-founder and CTO of Unstoppable Finance, dedicated to democratizing access to decentralized finance. He was previously the CTO at Börse Stuttgart Digital Exchange and co-founded the Solaris Bank. And with a strong entrepreneurial background, Peter founded a successful software consultancy in 2008. He's also a frequent speaker at blockchain and fintech conferences. You always see him wearing this nice hat that he also has on today, and is now focusing on building the first on-chain bank with Iron. Peter, warmly welcome.
Thanks for the introduction. I'm going to talk about Iron today. And what are we doing? We are building the first on-chain bank. And I'm going to explain you in the next minutes what it's all about. I think many of the speakers before have already told you that the future of capital markets is on-chain, right? So tokenization of real-world assets, of the money rails, and so on. And so we really believe that the next JP Morgan that's going to be started really embraces this emerging on-chain capital market, and especially also because what are banks about? Banks are about dealing with money, and so in the past we've already seen a multitude of different forms of digital money. So I think like fiat money in the past has already been digital. We've seen e-money. Now we have, with the stablecoin regulations of MiCA, we have tokenized e-money. The whole world is talking, or like the whole Europe is talking about the digital euro. Then there's also wholesale CBDC tokenized deposit tokens. Most of these forms of digital money are handled by banks. Yeah, so stablecoins can be handled by payment service companies, e-money institutes, but still most forms of digital money is handled by banks, and therefore we want to kind of build the first bank that's able to connect them all. And we have one specialty because we build the whole bank on chain, so which in the end means that all fiat deposits that live with our bank are on chain. And I'm going to explain also in a minute how we do this, because for this technical handling, we're building our own chain called Iron Chain. So also important notice, we don't have a banking license yet, but we're pretty proceeded in the application already, and really hope that we can receive the license within the course of next year. So who do we address? So we mainly address institutional B2B and B2B2B companies. So in the end, a highly underserved ecosystem. I think especially the people of you who are already in the crypto industry, trying to get a bank account, that has always been hard. If you handle large amounts of money, for example, like stablecoin issuers, like market makers, exchanges, and other companies, it's very, very difficult to get a bank account. And so if you get one, usually the technical integration is really lacking and a different to do. And so especially with the upcoming stable coins that come with Mika, so we face like also rules that are about distributing the funds across multiple banks, and as there aren't that many, so we hope that we can use this as an entry gate, but especially then also helping stablecoins, market makers who do the prices and the exchanges to really connect and let money flow in a digital way. So that will be our main proposition in the beginning. But of course, you can imagine if you tokenize money, it's in the end programmable money. You can do a lot of stuff with it, especially also. So we aim to let certain DeFi applications to be run on Iron Chain as well. So, for example, for the named gateway between the different forms of digital money, we intend to build this as a smart contract based swap. Yeah, so we're actually pretty excited about this because any bank needs to have a core banking system. You can get one for a lot of money from the market, but usually also these systems are not good. It's timely to implement them, and so they're. Yeah, so also pretty old technology being used for this, and so we were thinking about how to handle our own core banking, and so as we also back in the days at Solaris we built our own one, so we have quite some experience in building our own one, and if you do it today. So we were thinking, so the most natural form of money is to make like a token out of it. So for example, if a withdrawal comes in, so we tokenize the money and displayed in your wallet. So in the end, there's like a physical wallet infrastructure. All security processes that are connected with the bank account are the same ones that we know from handling non-custodial wallets or also custodial infrastructure. And but the specialty with Iron Chain is that it's like a bank rate blockchain. What does this mean? So we have seen two fields of problems with the current public blockchains. The one is about the privacy and encryption. So many mass world use cases are not really possible because if you expose your public address to your friend who sends you some money, then you expose yourself and people can stalk you. So this is a huge issue, and there's even people arguing that the more transactions you do, the more transparent you get, that it even vulnerates the GDPR. So in the end, it's the big question how to handle with data privacy. And the second aspect is also about an upcoming regulation that also comes at the beginning of next year. It's the DORA, Digital Operations Resilience Act. And this one is about IT compliance. And in the end, if a bank uses a system to store the money of the customers, it's a technical system that the bank uses, and it at least needs to have certain control over it. And we intend to release Iron Chain. So at the moment it's SPE based, so based on Solana, and we've built some token extensions, for example, confidential transfers and also confidential account balances that we're also currently submitting to open source, contributing to the main code base of Solana. And but we are going to let it operate it in a permission network of, for example, banks, but also companies that are able to operate these nodes. So there are also other banks connected to it. We intend to have like a multi-issuer token that's then also be able to be sent across a network of connected banks. Yeah, I think we're over time. We have great investors like w3.fund, Lightspeed Speed Invest, and happy to hear your questions.
Let's take one question, and then you can, if you have the time, obviously, can answer the rest in the chat. Are you actually acting as a custodian, or will funds ownership always be with the customer who has full control at any time?
Yeah, so of course, a bank to some degree is always custodial because also the bank needs to have certain rights. For example, so if, for example, a police investigation is coming, then it's needed that the bank needs to be able to freeze the funds and handle the process in the background. So in the end, the tokens will have like a backdoor so that the bank can operate according to laws that the bank needs to handle. But still, like for the technical infrastructure, we plan to let the customer also configure the multi-signal processes. So in the end, if you want to kind of have like a withdrawal limit at 50K and then needs to be a second signature, this in the end can be handled with PKI, so as we know it from public blockchains.
Thank you very much. Then I appreciate that you're holding the presentation, and we can move on to the last speaker. Warmly welcome to Jan Kühne, who is the Senior Director of Partnerships at DLT Finance, a BaFin-regulated crypto investment firm fully immersed in the crypto space since 2020. Jan previously held roles at Coinbase, Börse Stuttgart Digital Exchange, and Alloy. What a CV.
When I saw that I will be pretty late in the session here, I was a little afraid it will be in the session at that time. But then I saw that I was just being after Peter, so that gave me confidence that most people will still be here basically at the prime time of the session. So happy to guide you through what DLT Finance does here. We empower institutions in driving the digital adoption. We do that both for builders and investors, but due to popular demand, I will focus in the next 6 minutes on the builders. And that's why, because we got a lot of questions in the beginning prior to this session to share something on our recent partnership with Kraken. So happy to give you some insights on what we're doing here with Kraken. So what is DLT Finance? We are in its core security trading bank specialized in crypto. So we are, to stay in that picture, the picks and shovels for crypto services. At the bare bones, we are a security trading bank. We have a whole set of license for security trading by BaFin, and that enable us to offer all the different use cases you have within trading. And we are focused solely on crypto, so that to do that, obviously, we need the crypto custody license as well. In Germany, that is enshrined in the German Banking Act. So if you want to do really comprehensive crypto services, you really need the crypto custody license coming with that. But if that's the picks, the shovel then is really that we are fintech at heart. We are 5 years old, but we really maintain that entrepreneurial venture mindset. So we're still the speedboat, and you really need that in crypto if you want to keep up with the pace of innovation happening in crypto. And I don't see that pace of innovation slowing down. It's rather going up. We provide the building blocks really to enable companies with our platform, and we have a whole platform for crypto market infrastructure, enabling really all aspects within crypto services. Why are we neutral? It's really because we're not a trading bank ourselves. We don't act as a prop trader. We are not a market maker, but we just really service an infrastructure for our clients to have the best liquidity they need and the best way to securely store their assets. But we are interest-free, free of conflicts of interest in doing so and servicing this platform. On the crypto brokerage side, we service both spot and derivatives, as we have the MiFID license coming with the security trading bank license. We can service that as well. We have our own crypto custody license, which is extremely important, as said, if you have a crypto service offering for retail as an example, but also if you want to do prime brokerage and do things like off-exchange settlement, just as one example. And we partner with banks on the fiat rails, which give us a lot of flexibility, like virtual IBANs, doing different foreign currencies, and really be flexible what fiat rail infrastructure our partner brings with. And being under AML and obliged to it, we do our own KYC. We can share that KYC with our partners, but we can also rely on the KYC partners bring to the table, which is obviously very helpful with regard to conversion of products. On the provider side, we partner with a lot of players in the market. On the liquidity side, with other exchanges, with OTC desk, with trading firms, market makers, ECNs. So really we can integrate deep liquidity or whole variety of coins. On the custody side, we use state-of-the-art MPC tech. We have partners for the AML monitoring, which is, if you run a fully regulated business, extremely important. And on the KYC side, we partner with video ident services and bank ident services. For whom we are doing this, partners, and these are partners on the builder side. I already mentioned Kraken, who partners with us and using basically this infrastructure here in total integrated via APIs. But we also have partners on the more TradFi institutional side, that is SDX, Six Digital from Swiss. And we have partners from the fintech side, like Neutral Carbon Exchange for carbon credits. But we use their partners, as I said, also for investors as a platform. Prime to Prime is one example in the prime brokerage side of things. What this chart also shows, and I think that's interesting, that the institutional adoption of crypto, and we're talking about that for quite some time, is really taking place in all of these different brackets here, because these providers here, us, but also all the others we rely on, are really getting more and more institutionalized and helping them really also the crypto native who have an offering out there to clients to get regulated and institutionalize the business as well. The modules we have here for crypto trading, crypto custody, and the fiat accounts, you can basically, like Kraken does, use all of that, the trading part, store clients' asset in our custody, but you can also take part out of it. If you just want a single trick pony for crypto on-ramp, obviously you don't need to take the derivatives part of it. We do in some instances custody only. We use that for payment use cases. So it's really a modular approach, and you can take any of these pieces and integrate that into your offering. And this is really important for anyone who wants to address the German and European market with MiCA coming. To have a fully regulated offering allows you then to actively address the German market and do marketing, online marketing, which is extremely helpful. The market is getting more competitive than it was a couple of years ago. And this is really what enables you to partner with a DLT Finance. That's it. Open for questions.
Mm-hmm. Now that you said partnering with DLT Finance, can you sum up again what kind of companies or people you're working with, or who can approach you in terms of partnerships?
Basically, everybody can be a crypto native companies who lack license, but maybe bring in whatever services to the clients. But we also talk with TradFi people who maybe have the custody license, but are lacking access to liquidity. So it's really the whole brand of it. It's only obviously on a B2B2X or B2B2B setup. We don't directly service retail clients.
And thank you very much. If there's still more questions in the chat, feel free to ask them to Jan. And we can basically move to the closing line of this event. First of all, thank you to all the speakers and the listeners who participated, and everyone who also reshared the conference and made sure that everyone was aware that we're doing this today. It was the very first time for us, but I think it was a really great event, very insightful from what I've read also in the comments. And I appreciate that many people were also really participating and engaging. And I think that's very important if you do something that's online. I learned a lot. And if you want to reach out to all of the speakers, their LinkedIns are everywhere in the chat, but we also just check on my LinkedIn. I tagged everyone who was participating in here today in one of my recent LinkedIn posts. If you want to get in touch also with us, now that you know extensively what we're doing in terms of investments, staking, or the nice co-working space here, when W3 taxes, please know. We're more than happy to get in touch with you, answer all of your questions, and support you wherever we can, as we do always in the Web3 ecosystem. So thank you very much.